Hey, Patrick.
How are you getting on, friend? So, what have you for me today?
Well, we're having Caleb Hammer give us a Klarna update as to what they do, how they work, how
Oh,
they
yeah.
function.
Yeah, they were. I remember we did a Caleb Hammer episode, and I remember I was looking up their website.
Right. Well, we did an arc
And
of 3, and it was the Seattle barista manager who
yeah.
just decided to finance burritos along with weed and other things, I believe, through Klarna.
on this credit card, particular credit card.
Yes, very, very, very poorly done. So let us let him start cooking, and then we will see what he has to say.
I guess Klarna just IPO'd. You know, Klarna, we love them. They're all over financial audit. People fuck their lives to them because why not? Paying for destroy your life, 35% interest. Sure, great business model.
So 35%. What's the cap in Ireland or the EU?
Normally per month, between 2 to 5% would be the highest on unsecured credit cards.
Got it.
6% in some other countries, but
so
I haven't heard of 35% AP. I'm just looking at their website right now. Yes, 35% per month.
That's usury. That's bad. All right, here we go.
Okay. That's wow.
I'm curious. Is it a failed business model? Is it not? Let's find out.
If you've bought anything online over the last few years, you've probably seen the option to buy now, pay later. It all began with a Swedish debt collector who turned a simple idea into a $350 billion industry.
And that's a little bit. That's ooh.
Oh yeah. And it's predatory lending. There's no other way of addressing this one.
Oh, for sure it is.
Oh wow. Roughly, there's a rough idea what people, if you borrow say $100, you pay back roughly $135. But if that rolls over, it suddenly is nearly $200 for unsecured loans. So unsecured is short-day loans. They have an interest-free first month if you pay it before the end of the month with a fee attached, obviously. There's a couple of different cards. I'm just looking at it right here and
free
right now.
Plus fee, which is not free of interest functionally. Got it.
Yeah. They say that in brackets, by the way. It's interest-free in brackets with frees included, blah, blah, blah. The usual small print that people sometimes forget. So say if you get $100 you've paid before the end of the month, you could be paying them 110 or 105. So they'll still get a certain amount of money out of you. They're not free. Banks are not charity.
Yeah, never free.
Bear that in mind.
All right, here we go.
Yeah.
Now you're Klarna-ing your Chick-fil-A DoorDash.
And the company he started, Klarna, which leads the buy now, pay later market, is about to go public at a valuation of $14 billion. So if this industry is the future, should we invest in this IPO and profit from what could be the next huge finance company? Or are there just too many red flags in a business that helps people spend money they don't have?
Right, that's super bad, right? If I don't have enough money to buy my Chick-fil-A sandwiches today, right? it's the middle of the month.
You shouldn't be buying it. You shouldn't be buying it.
Yeah.
If you don't have the money to buy that sandwich, you shouldn't be buying that sandwich. End of story. I know a lot of people saying, oh, I could start that, whatever, but surely you can scrape together a budget and budget enough food for the month and so on.
Oh, social welfare sandwich. Peanut butter and jelly is great.
Yeah, whatever you're into, whatever you can afford in your budget.
Maybe it's Miracle Whip bologna and Wonder Bread. Maybe that's what it is. But it's
Miracle Whip?
Miracle Whip. Yeah. It's like mayonnaise, only worse. It's like sweet mayonnaise.
Oh.
Yeah.
Oh, yeah. Okay. Oh,
okay. When you visit the United States, I'll have you try a little on a sandwich. They bring social welfare sandwich to a whole nother level. Some people like it. It's just a.
Hey, some people like Marmite as well, but it's not for everyone.
Vegemite sandwich. All right.
Oh yeah.
So yeah, it's a bit of if you can't afford the $17 plus delivery, right? So there's a delivery driver who is bringing you your food. So they get a cut, right? They get a couple of bucks, $5 to $6 to bring in a sandwich, right? And then you're paying for the sandwich, and then you're paying interest. So you could go to the store, the Chick-fil-A, and buy yourself 2 sandwiches for $15, whatever the cost of the sandwiches.
They usually have deals on so on in store.
A couple sandwiches get a deal. Yeah, maybe get a refreshing beverage and some French fries or something. Yeah, right. But if you do that, $15-$16, we'll say for a couple sandwiches. But if it gets delivered, it's like $30 because there's a lot of other things involved. And then if you do it on Klarna, there's another charge. So you end up paying $40 for 2 sandwiches. It would have cost you $15 if you just, jumped on your shoe brews and walked on over, right? So
Now, bear in mind, I've watched quite a lot of Caleb Hammer. I've seen it. It doesn't sound like much when you put it 40. I've seen people ordering every second day or every day in some cases. So they're paying out nearly $1,000 a month or from that more for just food to be delivered to their house.
and that's a grocery budget. You could buy an entire set of groceries to include steak and pork chops, asparagus, potatoes, rice. Like you can get all your staples with $1,000 a month, as opposed to two Chick-fil-A sandwiches every other day.
Especially, by the way, this would be one individual spend that kind of money. Bear in mind.
Yes.
It's just when I have to go back in my history to think of the video, but this particular young man he was making really good money. This was a young man who was making really good money, but he was in debt up to his eyeballs.
Well, that's who Caleb Hammer has on. So that's the way it is. Yeah.
But a lot of it was just food. Just food debt. That's the best way to put it.
Delivered food debt. So
Today's video, I'm going to make...
Less about to spend money they don't have, but I'm just nervous because Klarna's debt is insane, is it not? All these companies, the buy now, pay later companies and the paying fors are funded on such massive debt. They're Klarna-ing their own business. They PayPal paying forward their own Klarna business. It's kind of fucking crazy. Firm's profit. No, that's good.
Well, you understand what he's saying there, right? They're taking their own debt and doing the same thing to it by pushing it forward, and they're doing it
pushing it forward to another finance company. But
so they're getting people to pay for stock in their company, and so it's like a really awkward pyramid scheme where we're just going to take the debt and put it on the people that pay for the IPO.
But I know for a fact that in the last couple of years they have had really good profits. Initially, they had a lot of debt, obviously, because they were loaning out a lot of money. But they are starting to make serious cash in the last 2 years.
Right, but a lot of that's because they do torts and they take the money, they get judgments against people. So it's super predatory, right? So now you're going to pay me this massive amount of interest. And once we set the judgment, that's fine. We're going to take this money from you. So their wages are going to get levied. Their wages are going to get garnished and the bank accounts are going to get levied. So because somebody wants the damn Chick-fil-A sandwiches that bad and they don't want to get off their ass and go get the sandwich. It's just become so easy. You can order anything to your front door, pretty much anything. So.
It's crazy. Absolutely crazy.
Pull up the metrics on Klarna.
It really easy for you to understand Klarna so you can decide if you want to become an owner in this company.
Deal. Dude, the fucking Klarna, man. All I know is it does destroy people's lives. If anyone has the worst finances on financial audit, you know for a fact they have a Klarna or Affirm. 100%.
Yeah.
The one
and that's not just anecdotal, although that has been his experience. Like it is shown across the board statistically, if you have Klarna or an equivalent, your finances are going to be screwed.
You don't have a clue how to do a proper budget.
Right. Well, and the other thing is in the United States, we don't have debtor's prison. Well, we have debtor's prison for a single event, and that is the failure to pay child support. But for every other kind of debt, there is no debtor's prison. You cannot go to jail for not paying things back. So it's like functionally, it's fairly consequence-free because you're not going to be incarcerated for it. So why pay it back? Doesn't matter.
Obviously, they're going to have judgments against you and so on. Is that the way it works over there? I presume it is.
Right. It becomes more difficult to secure loans in the future if you have judgments against you or bankruptcies.
Yeah.
So it
really screws up your future.
Right. But if you already own property, I mean, they'll just lien the property, right? They'll force you to take out a second on the house and then pay the loan. You know what I'm saying? Yeah.
The sad thing about a lot of these guys, and I've seen enough of Caleb Hammer shows, is when their finances are that bad, very few of them actually own anything themselves. It's probably the best way to put it, let alone property. Everything is just absolutely financed to the hilt. Even down to the food on their table. Yeah. It's absolutely crazy level of debt.
Well, California is even worse than that based on the standards of living. The average home in California, I believe, averages about $900,000. That's the median. So that means half the homes in the state of California are worth over $900,000. Young kids coming out of college, there's no way. There's just no way.
No.
So there isn't get a starter home for a smaller amount, and then maybe as you get a family put together and all that, you get a little bigger house because you're earning a little. That's not the thing. You're just not going to get into the first house on the front end.
No,
it's not going to happen.
But the sad thing about an awful lot of these people are on his show in particular, they just hobble themselves from day one. Like the amount of debt they take on for the income they have in. Some of them maybe, even if they stop their debt in the morning, in some cases, they're looking at least a 5-year road to be debt free.
Here we go.
Films with today was doing K-pop bands on Klarna and Affirm. K-pop groups, I guess I should say. Last year, full year ended June 2023, revenue of 2.8 billion, which was 22% up year over year. 12 months ending in June 30th, 2025. So June 30 to June 30, 3 to 3.2 billion dollars in revenue, driven by
Wow.
U.S. expansion and merchant base increases.
So more
Wow.
companies are getting into the.
Yeah.
So Klarna pays them for whatever the product or
Yeah.
service provided, and then they expect the individual who secured the monies to purchase the thing will be paying them back, right?
Yeah.
But the thing is, like, we're watching the nice lady, the barista lady, who bought on her special credit card that she had an emotional attachment to a hair dryer of $40.
Yes.
But it's going to end up costing her $250 by the time she's done paying the card down, which she'll never do
Yep.
because she'll just bring it to the max, bring it to the max.
Even when he sat down and broke down the maths right in front of her, she just could not make the connection.
But a lot of you,
I find that with an awful lot of these young, even by the way, I'm not going to just blame the younger guests he has, and there's older people on it as well. We're in the same we want it now attitude, and let the future look after itself, until they literally have people knocking on their doors threatening to take everything they have.
But like you said, a lot of them don't have anything to take. There's nothing to take because it's all financed to the hilt. They got a cell phone, a laptop, and a car. They rent an apartment.
And everything is just on finance. It's just crazy, absolutely crazy.
What about profitability though? Net income, net profit of $21 million in 2024. Okay, it's better than losses. $21 million kind of sucks with $2.8 billion of revenue, but
yeah, that's pennies on the dollar.
Oh, in Q2 2025, Klarna had an adjusted operating profit of $29 million. Okay, on its way up.
They are working it up.
Maybe it is the future.
The Klarna story actually goes farther back than you might think. The year is 2005, and credit cards weren't popular in Sweden. Instead, consumers had this try before you buy culture where they'd receive items and pay later via invoice. Now, this sounds amazing if you're a shopper, but if you're a merchant, there was a ton of risk if you didn't pay. Enter Sebastian Shemiakowski, who
is that a European model or is that just a Swedish model? What kind of?
It's a Swedish model.
Okay.
Very much a Swedish model.
So we want to try it before we buy it, and then if we don't like it, we'll just send it back.
Send it back, yeah. It's definitely unique to them. And over here, I think most European countries know.
Yeah.
If you want to try it, you buy it, and then you have the option then to bring it back in exchange for store credit.
was working at a debt collection agency and saw the gap. Merchants desperately needed someone else to take the risk of delayed payments, but consumers really enjoyed the flexibility of the status quo. With business school friends Nicholas Adelberth and Victor Jacobson, Sebastian pitched the idea to anyone who'd listen, and they basically got laughed out of every room.
They really look like the type of guys who will rip you off. Sorry. They really look like they really look like those guys. They look like those guys. Yeah, they're we're definitely going to. This car won't break down the minute it leaves the lot.
No, not at all.
Pinky promise.
Jane Whalrod wrote them a $60,000 check. But beggars can't be choosers. Jane secured a whopping 47% of the company in exchange for the money and 5 software developers.
That's wild.
Ooh.
Her.
That could help build the product. Klarna began as a checkout solution for Swedish shoppers, making it easy to buy now, pay later, by splitting purchases into interest-free installments while guaranteeing revenue to merchants. The idea spread fast, drawing in retailers and users.
Yeah, the retailers don't take a risk there. Klarna's the one that takes the risk, and then Klarna's the one that chases. Right, yeah. But in the United States, you end up with, like I said, a lot of tort, a lot of you failed.
A lot of legal processes and so on.
Yeah,
and I presume over in Sweden is the same way. But
it's a small claim or a plaintiff's claim in order to defend it in the United States for less than 10 or 15 grand, depends, right? That means that they will just hire these law firms to churn out all these legal cases, and then they'll get judgments, and then they'll just start nabbing your money again, either garnishing your wages or levying your bank account. Generally speaking, they garnish wages. It's easier.
Wow.
And you will pay at that point because your employer gets served with documents, and once they're served, their payroll just goes, "You're losing $117 every week, bud, because you financed your chicken sandwiches." Yeah, right. Right. So that format is really, really good, and that it creates a legal process where they can just take their money back.
Yeah,
But then,
they will get paid.
no, they will get paid. But the thing is, it's just going to force a lot more bankruptcies as well, because those people just aren't going to accept 117 a week. They'll be like, I'm just going bankrupt. And then Klarna's going to be left holding the bag, because they'll get either a very, very small percentage of that money or none of it at all. It's unsecured, and the state isn't going to secure that money in any way. They're going to say, hey, you got to pay it. And if they just declare bankruptcy, again, no debtor's prison, just done. We're just not going to pay you.
Yeah.
There's going to be a diminishing return on this.
Across the continent and eventually the United States. Before fintech valuations crashed in 2022, Klarna was the most valuable private company in all of Europe. Fast forward to today.
It's fucking crazy. Europe is such a failure. Where is their startup scene? Where is their tech scene? Where is their fintech scene? This was the most... I love America. I'm glad. Listen, there's a lot wrong. I'm just glad we have innovation and people ambitiously trying to grow shit. I would be embarrassed if Klarna was our top company. That's fucking crazy.
And Klarna has 111 million active users.
Funny thing is, I've never heard of Klarna until I started doing this show.
111 million active users.
Yeah, just bear in mind, I live in Europe, and I've never heard of it until I started watching Killer Hammer. Never heard of them.
They have other firms that do. No, he said there's other firms that do that.
Yeah, there's a load of companies in Europe. There's a load of companies all over the world do exactly the same thing.
Right, they're Klarna clones or some. Okay, all right, here we go.
I know the Japanese have done it for a very long time, long before this guy came up with this idea.
But they have a culture of shame, and they will pay.
Yes, I'm just saying that he didn't pull this idea out of thin air. I'll be honest, this young man.
Right. Oh no, of course not. But I think he perfected the model. And that nice lady took him and his boys for a ride.
If you become a member of Klarna, I'm just looking here on their website, to know if you pay a certain rate of $15 a month, you can apply for their low interest rates of loans of 2.9%. All right.
Okay,
that's pretty reasonable.
Better. That's a lot better.
Plus fees. And plus fees. Don't pay fees.
Oh, fees. Oh, yeah.
I like the fact that I have that in kind of brackets in some places. You're kind of going
fees.
All right, yeah. That looks good. Oh, the fees. Okay.
Fees.
How much are the fees?
Fees.
And you have a fees document, and I'm not joking.
Fees.
I've seen law papers that are not as long as this thing.
God. All right. Here we go.
It's true. They did innovate a way to keep force my bottle cap to say attached to my water bottle here.
Countries and helps consumers buy 112 billion worth of goods every year from 800,000 participating merchants.
Well, where'd they IPO? Though?
It's growing extremely fast, with Klarna's US revenue up 39% last year. But this company doesn't want to be just seen as a BNPL company anymore. Klarna wants to be the next JP Morgan and Amazon in one.
Are they investing? Are they wealth managing? Oh, Amazon. Wait, that doesn't make sense. Amazon, how? Are they going to AWS?
Super app at the center of every consumer.
Is there going to be social media on Klarna right now? Are you going to be able to chat to your friends on Klarna? Send dick pics on Klarna? Dude, if I receive a pair of tits on Klarna, I'll finally use Klarna. You know what? I'm open-minded.
It's pretty low threshold there, bud. That's a pretty low threshold.
Yeah, I'm actually, believe it or not, Klarna actually has an Irish website. Looking at it right now.
Uh-oh.
Yeah, there's not many users. I just Googled it there.
How much Guinness can you get on that, bud?
Their yearly interest rate in Ireland is 1.89%.
That's not bad at all.
Fixed rate.
What about the US?
It can go as high as 35, if not more percent. It depends on the loans.
Yeah, they're really looking to attack this market, aren't they? For sure.
Of course they are. Because we, as I was telling you, we have laws in place for this kind of lending.
Their own bank with 14 billion in deposits, launched a debit card with 7.5 million users, and they've become a shopping destination in their own right with an app integrating shoppable video and what could be a huge app.
That's crazy. I could see it. I mean, people love TikTok shop and shit. Fuck, I could see it. He's selling me right now. I don't really buy many single stocks, but he's selling me right now.
Advertising business. Klarna has had its sights set on becoming a
finance a femboy. I'm sure you can, a little Scandinavian femboy.
public company for a while. They filed their S1 back in March, but delayed their IPO due to uncertainty around tariffs. 9 months later, and after a string of explosive IPOs like Circle and Figma, they're looking to hit markets at a valuation of around $14 billion. That's way down from their first valuation of $46 billion, but
Still crazy.
up from the $6.7 billion they had in 2022.
Yeah.
So since this video is about figuring out if Klarna is an investable business or not, let's dive into how they make money.
They get you to use their card, pay the fees plus the interest, and then if you don't pay, they get a judgment against you and take it directly out of your paycheck.
Yeah.
Right? So you can't avoid it, right? Unless you go bankrupt on the back end.
And there's a lot of companies that use Klarna. Like I'm looking here, they're Spotify, Temu, IKEA. This is a massive list. You know all the common ones, Samsung, everyone else. I'm just looking at their US site now as well. And yeah, there's a big difference in interest rates between the US site and the Irish site. I mean, the interest rates are just wow.
Well, because the EU dictates. Yeah, I get it. All right, let's check it out. Let's see what the business model breakdown's all about.
Unlike most fintech companies, Klarna's business model is actually very simple. When you buy a $100 pair of shoes from Nike, Klarna pays Nike $97 and keeps $3 for itself. Nike is happy to pay that because you're buying.
It's like the payment processing fee, right, from credit cards essentially. But the thing is, with the credit
companies happy
for the membership on YouTube. With the credit card companies, typically it's not the customer that pays it. I'm sure it's translated on and over averages. When it comes to pricing the product, but it's priced into the you buy the product at the price, and the business pays the transaction fee. How does
they're winning on both sides of the
actually very simple. When you buy a $100 pair of shoes from Nike,
but you're buying 100. Okay, so it's same. Okay, same thing. Okay.
Klarna pays Nike $97 and keeps $3 for itself. Nike is happy to pay that because you're buying a product you may not have bought otherwise. When buy now, pay later is available, we're just more likely to buy something. Since Klarna makes money from the merchant on those purchases, it doesn't need to charge you interest, even though it's loaning you money. And while these merchant fees are the primary way that Klarna makes money,
well, I know, and again, people think like the primary way these credit card makes money is interest. No, it's the transaction fees, man.
Yeah, it's transaction fees.
Yeah, it's the fees that catch in the end as well.
Right, but so
that's what I was saying there is there's a fee at the end of the month. Say if you even it's $5 or $10. So Klarna is making say 3 off Nike and 10 off you. So they're making $13 off that $100.
Well, yeah, I run a small business, and when I run a credit card or a debit card or whatever, like I get charged $3 and some change per hit. So every time I charge someone for services provided, right, they'll pay me say 65 American dollars for the thing, right? So I get the $65, but I have to pay the bank $3 for the transaction.
Wow.
And change, right? Okay. So every time I make a transaction, so that means a transaction, I have to eat that cost somewhere, right?
Yeah.
So generally speaking, it is part of the process.
Cost of doing business.
Cost of doing business, yeah. So, but the customer ends up on the back paying for that, right?
Yeah.
For that transaction fee, but it's built into the charge to the fee schedule.
It's kind of crazy.
Also generate revenue if you're late on a payment by charging a late fee, and in some transactions, they'll charge you interest up to 35.99%.
Which, by the way, anytime I see interest on Klarna on people's statements, it's always at that 35.99, which is fucking crazy because the top of credit cards right now is like 28%. IPO, what's an IPO? Initial public offering. So they're going out so you can buy their stock on the stock market. Essentially, it's the simplest version.
If you want to pay your purchase off over a longer period of time. Now, the newest way Klarna is making money is through advertising. With 100 million active users and deep purchase data, Klarna knows what you buy, when you buy, and what you're most likely to buy next. Klarna has grown their ads revenue from 13 million in 2020 to 180 million in 2024.
That's a massive jump.
Interesting. It's really, actually, that's a good idea from a business side. That's a really good idea.
Right, because so many people are looking at it and they're getting so much data from it. For sure. They
have so many eyeballs. Yep. Wow.
And they made it clear to investors they want to focus on this more due to the higher margins of that business model. Now, before we dive into the actual numbers, I want to emphasize something interesting about Klarna's model that makes it different from other buy now, pay later companies. Most buy now, pay later companies have to go raise debt to fund the purchases that
Affirm was on that list that he was talking about.
Yeah.
Didn't Klarna go into debt?
high interest rates. But Klarna, on the other hand, actually runs a licensed bank in Sweden. That means it can use its own customer deposits to fund loans, which is a
Whoa.
lot cheaper than borrowing it.
Fuck. This guy's selling me, man. This guy, are
Wow.
we investing in Klarna right now? Are we investing in Klarna?
Actually, you know what? Sounds like a good stock.
Klarna held around 14
It's starting to. Ooh. But
Yeah.
I got a feeling.
So they have their own private banks guaranteed by the Swedish government.
Yeah.
Okay, so that makes sense. So they don't have to do what other cards have to do. All right. Okay. Actually, you know what? Yeah, I'm looking up that IPO right now. Actually,
deposits, mostly from savings accounts in Europe that it attracts through high interest rates. That means Klarna can raise money at roughly 3%.
Are we investing in Klarna right now? Are you investing in Klarna? When did they go public?
Klarna Group PLC.
Wednesday. They went public Wednesday. It's only gone down.
yeah,
but,
it's €40 per share, by the way.
You know,
If anyone's interested.
I mean, this is like it's all
No, sorry,
first,
it's
right?
$40, so
we
that's about
investing in
€10.
Who's the narrator that we always react to? Is this his channel? No, it's not. I've never seen this guy. This is not a bot either. It's a real dude. We like money something fuckery, you know, that kind of stuff. Yeah, they open with 42. Oh no, I mean they're at 42 now. What did they open? Almost like, what was that? 49. Interesting. Okay, guys, are we getting Klarna?
Cover that cost with the 3% merchant fee it charges on transactions, and then look to profit through late fees, interest from longer term finance.
3%.
Yeah.
Did you see? That's incredible. Wow. That's insane. That is, oof, okay.
Deals,
Yeah,
high margin advertising inside the app. So now that we know Klarna's business model, are they actually making any money?
Well, we already answered that, and it's not great profit.
It's not, yeah.
It's profit.
Right. It was said it was 21 and then 25 million on.
Yeah, they're not. Yeah, they're not making an absolute fortune. Yes.
Right.
Yes.
Well, but there's going to be diminishing returns on this, right? Because of the amount of money that's controlled by the lower 90%, right? So in the United States, there's $22 trillion, $22.78 trillion in play, right? The lower 90% of the pyramid, or the lower 90% of earners in the United States, control 35% of that money. So that means that it's down from, in 1985, it was 65%, right? Of close to 3 trillion in total. So there's more absolute dollars, right? But the dollars are not worth anywhere near as much. So there's going to be a point of diminishing returns as that amount, as that 35% reduces over time, and the top 10% of earners are expanding into the space, right?
Yeah.
So there's a diminishing return point, but the question is how long do they make money before that diminishing return hits, along with they are now filing judgments against lots of people who take the money, and the bankruptcies in the United States because of the 35.99% really screws things up. Yeah,
like they were ticking away in Europe. By the looks of it, just looking at their public offering here, it looks like they were ticking away. They were breaking even most years before they hit the United States. Obviously, they're making not absolute hundreds of millions, but they're still making a lot more profit than they used to be out of the United States model. But yeah, they sold 34 million shares at $40 a share.
Well, it started at 49. It's at about 40 right now.
Yeah, it's 40 now. They're valued at $40 per share, and they look like their range is going to go down as low as 35. Okay, so they're trending downwards.
Well, they are trending down, but again, like
but that's by the way that happens in marketplace. They trend up and down, and
for sure.
Depends, but still not a bad investment, short-term investment if you bought some of their shares.
Understand, we are not a financial institution, nor are we making actual like
financial advice in any way, shape, or form.
Right? Yeah, we're not those guys. We're not those guys at all. Looks cool. I don't know if it's going to work. How about that? All right, here we go.
I mean, Amazon was public for forever before ever making a profit, so they're doing that.
Klarna's financials tell two completely different stories. And the first is that this company is absolutely crushing it. Revenue hit $2.8 billion in 2024, up 24% year over year, while GMV rose to $105 billion by 14%. Last year, the company also reported an annual profit of $21 million after years of major losses.
Yeah, well, I made a $10 donation this stream. Hammer HMMR public on the New York Stock Exchange. Invest in us right now. We're coming at you strong.
That momentum
Oh my
has
God.
continued into this year, with revenue up 21% to 1.5 billion for the first half of the year. Klarna has also gotten a lot better at monetizing their customers. Their take rate improved from 2.3% to 2.7%.
I'm sure they're collecting the data too.
Yeah, the data.
Right,
is-
should be
yeah.
HAM, H-A-M-M.
Yeah.
Better idea. There you go. That's true.
Meaning they're squeezing more revenue from each transaction. But when you dig a bit deeper, there's another story. That $21 million profit they had last year is more accounting gymnastics than actual bottom line growth. That profit they highlighted was bolstered by one-time gains, most notably the sale of Klarna's checkout business. If you strip that out,
They sold their checkout business? They sold a part of their business?
Klarna's actual losses would have been closer to 4
I think they sold rights, like individuals
Yeah.
can purchase rights to use it. I don't think they sold that portion of the company.
Yeah, but still, as he's saying, if you strip that out, what is their actual profit?
$400 million on the year. And if you look at Klarna's most recent financial statements from Q1 and Q2 of this year, its losses are actually accelerating.
Didn't we just have numbers that said it's made profit? Q2, Klarna had an adjusted operating profit of $29 million.
Yeah,
Note
adjusted.
that that's not
There we
because the
go.
core business is backsliding. On an adjusted basis, Klarna delivered $32 million in profit over that period. Instead,
Okay.
those deeper losses came from one-time charges related to the IPO and other accounting items. Overall, Klarna's business is much healthier than it was a few years ago when it was losing nearly $1 billion a year in 2022. So up to this point, Klarna hasn't proved it can build a quality business.
So that $302 billion was just, is that just a smokescreen? If they're losing,
No,
$1 billion a year?
they genuinely, yeah, they generally, yeah, you can generate massive profits, but you can also generate massive losses at the same time. So it looks like, yeah. So as he said, they did a bit of creative accounting. They sold a part of their business just to show that they made a profit just before they were doing launching the IPO and so on.
Right.
Yeah, it'd be
make it
very
more
interesting to see this time next year what their true share price would be.
But they're laying out a few different ways that they intend to become one. One of the main reasons Klarna loses money are because of credit losses, which are by far the most controversial part about this company.
Which, I mean, now it's being reported to credit bureaus. I'm sure they advocated for that pretty hard, right?
Yeah.
So that people had negative consequences if they didn't pay their debt on time. Making it so that they hopefully don't.
And the BNPL industry as a whole. Credit losses are loans that the company doesn't expect its customers will pay back. Klarna's credit losses exploded to 495.
Right. They're expecting them to fail. But again, they're going to be able to get that money back by pressing
Judgments and so on.
lawsuits,
So on.
So the judgments are going to make up for it. But is the amount they receive back and getting those judgments by garnishing wages and things going to be worth buying or spending the money on the law firms to represent them, file the documents, serve the documents, serve the proof? Yeah. But a lot of times people who are in these situations don't respond and they don't go to court. So they're going to make a few payments, maybe 6, 8, 10 months, and then they're just going to go bankrupt. So then they're going to get some back on that. But right. So it's money owed to them that they're just not going to get back.
Interesting.
Million last year, up from 353 million the year before. To put that into perspective, 18% of Klarna's revenue goes straight to bad debt. That means Klarna is losing more money on defaults than they spend on their annual marketing budget. The big issue
We love bad debt here.
is there isn't an easy solution to this. To grow revenue, Klarna needs to lend more, and that means pushing deeper into riskier pools of consumers, creating more potential for credit losses. So if high credit losses are just the reality of this buy now, pay later business, Klarna has to unlock profit in different ways. The company has aggressively cut costs, slowed down hiring to lean more on AI, and cut its marketing costs by hundreds of millions.
I'm curious about the more lean on AI because, we're not seeing a lot of like big industry statistics on jobs being replaced by AI, but I'm very curious.
I have made multiple phone calls to different kinds of businesses recently, and I have encountered 100% of my calls been initially intercepted to be dealt with by AI, and none of my problems were solved by that AI. I had to get a real person and say, here's my issue, it needs a solution. They're like, oh, okay.
I think a lot of people are jumping on this bubble with AI, especially not realizing it's very new technology in a lot of ways, and it'll solve some problems, but the technology is years away from being the end all of everything.
If I can solve the problem myself by going online to your website and getting the information I need and then manipulating it and do what I have to do, if I'm calling your business, it's because there's a problem. And an AI isn't going to have even as a large language model, it's not going to have the ability to solve the issue because it can't perform the task I needed to perform. Right?
And it's not even good at doing. Sometimes it gets really confusing, even as simple tasks. as we've found out over time, just messing around with it ourselves. It goes off in magical adventures completely, and you're kind of going,
right, for
just
sure.
stop. just stop what you're doing and think about it.
Well, and then,
please.
like with the legal businesses, law firms using all kinds of AI, and the judge coming back later and saying this was a made-up case. Like there's like the thing that you cited as precedent isn't precedent.
No.
So, yeah.
And I know a friend of mine, she's a secondary school teacher. She's got to the stage where she said, I'm nearly pulling my hair out trying to argue with kids to stop using AI because it's very obvious. And it's crazy the amount of kids are using AI just to shortcut their education.
Well, yeah, because it'll give you an answer, not necessarily an answer, but then it also
the right answer.
Well, no, it reduces your capacity for critical thinking. The AI is not going to be in your hand when you're taking the test. So you might get great scores for your papers that you've turned in, but you'll test as if you know nothing because you know nothing about the subject matter. Yeah,
you're literally just an empty shell.
Yeah, pretty much.
Underwriting and it's in the underwriting algorithm
over the past few years. Like I mentioned earlier, they're also super gung-ho on monetizing their massive user base through advertising. Klarna's shopping app is now where millions of consumers are beginning their purchase process.
Dude, that's fucking crazy. I didn't even know that was a thing. I that's probably just my ignorance, but I didn't know that's a thing.
Yeah, that marketing data is worth a lot of money.
Oh, big time. That's what they'll probably make a lot of their profit in years to come.
Well, yeah, because they're going to lose money on the other end with bad debt.
But obviously they're going to make it up.
They get.
It's one of those companies you'll look at, and it's all got all the bells and whistles. It has a possibility of being a very rich company in years to come. But would you put money in it? Yeah, would you put money into it? Would it be another Amazon? I doubt it.
I don't know.
Maybe I don't know.
Well, I don't have any Klarna in my portfolio at all. I just don't.
No, and we're not telling people how to invest their money.
Yeah, no, we're not making suggestions at all on how to invest money. But this is just an interesting look at what this company is going to have to do, reducing paid workers and then using AI. Again, I have noticed that AI cannot solve my problems. They end up taking my information and then handing me off to a real live person who says, "Oh, I can do that," and within 2 or 3 minutes, my problem is solved. But I had to make the call, and AI was just a block that didn't get me to where I needed to go. Like I said, I could go to the website and do the thing there if it was a possibility for me to do.
Yeah. Right. Yeah.
Am I an idiot for that? Fuck, I might be.
With 3 million transactions processed per day. Maybe Klarna's interest-free payments were just the Trojan horse to a trove of consumer data that can be sold to the biggest brands.
Yeah.
If Klarna could get its ad monetization to even $10 per user annually, a fraction of what Pinterest or Snap generate, that alone would add over $1 billion in high-margin revenue on its 110 million active users. But as of now, that's just a story. And it's the dominant one that investors will be buying into with the—
Imagine being able to Klarna rent. There's already like paying 2 services for rent where you pay half your rent on the 1st and half on the 15th. It's fucking crazy.
It's IPO. Now, the next way we'll understand Klarna's business is—
So
is that a big thing in the United States? Yeah.
I've never seen it. But there are, you can do cash advances by writing checks in some places. Right. So on the 20th of the month, I need a few $100s. So I go to the check cashing place. I write a check for $400. They give me $300, and then they'll take $400 on the 1st. Most places that's illegal now, but this feels like the same kind of thing.
Oh wow, that is wow. That's nuts. Wow.
Facts.
By comparing it to another publicly traded BNPL company that it competes with. But before we do that, I want to invite you to join my Discord server if you love finding new companies that can grow your wealth.
It's free.
Affirm is one of Klarna's biggest competitors, and it already went public a few years ago in 2021 at a price of $49 per share. Today, Affirm is trading at around $89 per share. That's an 80% gain, and its market—
Take a little peeky. Guys, are we buying Affirm? Are we buying Affirm? Oh, shit, take of a hit. Well, it went public at a great time for what it's worth. People at home shopping from their couch.
The COVID.
Deep in the COVID. Just like beep, 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 buying that shit.
Nobody touching grass. Everybody sitting in the house.
OF purchases.
Yeah, it is a good. He is right. It is a good time.
While they're gooning their dick off. Wow. Oh, Caleb, I said $1,000 from retirement. Well done. Keep going. Invest. Don't invest in one of these.
Can't believe he said that.
This is only going up this year
hilarious.
so far because because people were getting hyped about Klarna. This isn't great. I mean, it's overall from fucking launch. It's down 30%. Not great. It is.
Yeah, that's what I was saying.
Year over year. The flapping. Stop.
Market cap is roughly double Klarna's expected IPO valuation of $14 billion. This could be a positive signal for IPO, displaying investor enthusiasm in the buy now, pay later model. But what you should know is these businesses are actually quite different. Affirm doesn't focus on interest-free installments like Klarna does. Instead, it's focused
Really? Fuck, I need to learn more about these companies. I've just always found them to be pieces of shit.
on being more of a transparent installment lender charging interest. It gives users more flexibility than a credit card, allowing
So this is the interest versus
Yeah.
okay, that makes sense. Okay.
Mm.
them to pay over months or years, but charges higher interest rates up to 36%. Affirm is
Oh, there's that 35.99 again, dog.
Yeah. It's absolutely crazy. Absolutely
faster than
crazy.
Klarna, and it makes slightly
That's fucking crazy.
more revenue with a fraction of the transactions, just 26 billion in GMV compared to Klarna's 100 billion. And even though it lost nearly $400 million last year, Affirm trades at a significantly higher valuation than Klarna because investors see those high yield loans as a more reliable path to profitability one day. What I thought was interesting when comparing these two companies though, is that
but Klarna's at profitability.
Affirm and Klarna have almost identical
Right, but there was also some crazy business with their accounting as well.
That would put a pause on me if I was an investor.
Right.
Because obviously you look at this going, okay, they make 21, but the minute you see the word adjusted profit, you should even if you're going to do any basic investment in any company, and if you see at the end of the
what those are, find out what the adjustments
adjusted
were.
profit is, yeah. And you're kind of going, okay, they would have lost 400 million if they didn't sell this.
Right.
If you know, that's where you should always dig into any investment. Always say that to
of
people.
about 18% of revenue. The story for Affirm is that if it can grow its revenue faster than its OPEX, it can one day become a profitable company off high interest rates, not too different from just traditional credit card companies. Klarna's story is different. Instead of leaning on interest, it's trying to become a one-stop shop for banking and shopping with all the users it brings in with those interest-free plans. Overall, I don't think Affirm deserves a 2x valuation over Klarna's expected valuation, but bankers lately with these most recent IPOs
Well, I guess they didn't. They've gone down, but they didn't go down substantially for what it's worth.
Yeah, that's what I'm saying. They haven't dropped off.
It's hard to tell.
36%. Ooh, interest rate is a killer.
It is a killer.
Oof.
And especially because just the way they've designed it, it is literally a one-stop shop. Say if you go onto Temu or you go onto TikTok or anywhere like that, especially in the States, more so there's a massive list for a lot more stores used in the States.
Mm.
Over here, it's more like IKEA, those kind of companies over here.
Right.
Just looking at their website. They're really going after the younger audience over there, the younger generation.
The ones that are going to get absolutely flattened by it. Yeah, that's not cool.
Those are going to go onto the likes of Temu. Those who are going to go onto the likes of TikTok Shop and down all these different younger brands.
Yep.
That's where they're going to catch. That's where they're going to capture their future audience.
If they're being accurate or not. This comparison could actually point to a bit of upside for Klarna's IPO if you want to lock up some shares with your brokerage. But let's get into the risks, because with BNPL companies, they cannot be understated. BNPL industry as a whole is facing a bit of a reckoning. FICO just announced they're adding BNPL loans to credit scores starting this.
Which will help them, I assume. It'll make them afraid not to pay. Just want to sign book. Well, yeah. It is hard. I know. I know. We don't sign this. I'll be honest. We discussed the cookbooks because we just had thousands of people sign up for the annual version of the budgeting app. So I've been sending them out. That's going to be ending in a few months. So it's really it's probably going to be the last few months to sign up for the annual version of the dollar-wise budgeting app. And that's how you get this.
So the BNPL is going on to your credit score. That's going to be like, you just won't get approved for Klarna. You just won't get approved. Like, you can pay for it, but then they can't loan you money because you're not approved to get money. You know what I'm saying? It shows who the risks are, and the risks are going to be like anybody under 35, right? The entire audience they're trying to get a hold of, it's going to be a small percentage of them, and those who have the money won't need Klarna.
Right.
The process is for those who don't have the money, but they want the chicken sandwiches brought to their house, So,
yeah, it's crazy.
All right.
Yeah.
Here we go.
Signed cookbook.
this fall. And one of the biggest reasons why consumers loved BNPL is that it didn't show up and affect credit scores. Once BNPL hits credit reports, it becomes just another form of debt. The psychological barrier of
times
returns when
changing.
buying a handbag or a set of golf clubs can affect your odds of getting a mortgage. Overall, changes in regulation and credit reporting could have a severe impact on this industry going forward. Then there's the major competition in this space, which could keep Klarna unprofitable as they fight for the same users as a growing number of rivals. Apple Pay, PayPal, Affirm, Block, even American Express are all trying their hand to win users in what's already a low margin
Yeah, it's only going to be a few survivors.
market.
Wow.
Yeah, is Klarna the one that survives is the question. I think with the marketing side, with all the data they have on their users, I think they could survive, but I think they're going to end up being very slightly profitable. Like they're going to hold that billions in assets, but they're only going to make that 21 to 25 million, right?
Tiny profit, yeah. Yeah, second thoughts, probably not going to buy those shares. No, because if that happens, if this happens with the amount of competition they're going to get into this specific marketplace, if not,
right? Yeah, they're getting thrust into a marketplace that they didn't anticipate having to be a part of because they're going to be in BNPL, which means that if it's not tracked by the credit agencies, then they're good. We do this indefinitely. Once they start checking credit, then the shareholders are going to be like, we don't loan money to people that will not pay us back. Like you can see, they won't pay us back. They haven't paid any other debt. They're not going to pay this one. Now it doesn't matter, but then they're also going to have to hit the legal firms and start getting their money through judgments.
Yeah, I think what a lot of these companies, especially, don't understand is the minute you go public, you're answerable then to shareholders. And shareholders like money.
That's what they like. That's why they've invested.
So that's why, as you were just saying there, the minute the shareholders have their first meeting, they're going to say, you better stop loaning to these kind of people on this credit report.
Well, once it gets into the credit rating, credit bureaus, All right, here we go.
Yeah.
Share will mean either taking on higher credit risk or spending more on marketing, neither of which is sustainable forever. There's also something else that's a bit suspicious about Klarna. Klarna paid over $7 million to entities connected to the CEO's wife. Milky Wire AB, a sustainability firm she founded, received $1.6 million for environmental services. Klarna also donated $3.8 million to World Foundation, where she's a board member. Now, the board approved these transactions without the CEO included in the decision-making, but related party transactions can be a major red flag.
I would short the fuck out of Klarna. Do it. You can. It's not advice, but you can. I don't know.
Then there's the insider selling. Between 2022 and 2023, insiders dumped over $800 million worth of Klarna stock in private markets. Sequoia Capital sold 135 million shares pre-IPO. CEO Sebastian Chomyakovsky personally cashed out for $56 million, while co-founder Victor Jacobson took $73 million off the table. When the people who built the company are taking 8-figure paydays before an IPO, it doesn't send the strongest signals to the markets. But the biggest, most existential risk to Klarna and the entire BNPL industry is just the health of the economy overall. If Americans start tightening up on discretionary purchases, Klarna's growth engine slows immediately. At the same time, a weak economy could send credit losses skyrocketing, hitting the company from
right, and then everybody's credit score is going down, and they're not paying, and that is a big problem.
But it is very telling there that the founders of this company sold a big chunk of their shares.
Oh yeah.
It does not send the best signal ever to anyone.
Pretty much.
Wow.
Not a lot of
do not buy those shares. Do not buy those shares.
Well, they've already been sold, so they're good.
Both sides, less spending and more loan losses. Lending to subprime borrowers is risky even in a booming economy, and it's worth noting that this is the exact dynamic that caused the 2008 financial crisis. Some businesses are much more insulated than others in an economic downturn. But Klarna, which is already loss-making and holding billions in consumer debt, could be one of the riskiest stocks to own if economic conditions deteriorate.
Sure, but they do have their own bank, like we said.
Yeah, but like most banks, most central banks would only guarantee a licensed bank up to a certain amount. People have to remember that too in most banking industries. Unless it's a really state infrastructure bank, smaller banks like Klarna and all them would only be guaranteed up to a certain amount. Every country is different, but you normally get very bad losses.
So should you invest in Klarna? I'm not even going
honestly.
To watch it. I'm not going to watch it. We're not going to even look at it. We're going to let you watch his video and finish his video. We're not going to steal Caleb Hammer's thunder. We're going to put the link in there, and you can see what he's got to say about it.
Yeah, I think I can. We went to this video blind, but I can already guess his answer will be no.
Yeah,
It should be no. My answer is no.
Well, it's attached to the economy of the G20s, and we've got so much stuff going on. Like the UK's GDP just equaled debt just recently. So the growth there is going nowhere for a while. They're a decade out from being profitable again, right? And then the United States executed a bunch of tariffs and other wild things that are going to affect what we got going on. The EU, with all their bureaucratic backlog, is going to have issues. The decentralization and deindustrialization of France and Germany. There's a lot going on to show that the economies aren't going to be booming for a while.
Yeah, there's a lot of things going on all at once in the world economy. If I was young people right now, I would stop spending money you don't have to spend.
Yeah. Oh, it just makes sense. You're gonna have to consolidate it somehow.
You'll have to start cutting your cloth your measure. Stop, because when this train eventually, a lot of people are going to lose their jobs in the next 12 months, definitely.
Yeah, so there's a lot.
Start saving. If you don't have an emergency fund, start one now.
Yes.
Straight away, tomorrow morning. I know I'm kind of parroting Dave Ramsey, but he's right.
Yeah.
He's dead right.
You should repeat,
and if people
who are right. Yeah, it just makes sense.
Yeah. I'll even leave links. I'll even remind me to put a link in the description for Dave Ramsey as well. Great budgeting plan.
Alrighty, for Patrick McCallum, I am Alex Johansson. We're the A&P Gents. Like the like, ring the bell, subscribe, help us beat the algorithm. We are out.